Welcome to another market profile video where we discuss what single prints are and how we use them on our daily market analysis for entry opportunities. So what exactly is a single print? A single print is when a single letter, also known as a single TPO, is printed on a market profile which has prices both above and below it which have multiple TPO letters. Taking a look at this image right here, we have a market profile which is also a double distribution separated by single prints. As you can see here, this 8th period has left single prints right here as the market moved higher, and we have this area of single prints which is one TPO, one letter basically, and we have at the bottom and at the top you have 3 TPOs in this case at the bottom and 2 TPOs at the highs. So this is an area of single prints. Single letters at the top and at the bottom of the market profile are called tails. These are not single prints. In this case, at the top here we have a selling tail, and at the bottom we have a buying tail. Generally speaking, single prints indicate that the market has moved too fast in this area and prices will most likely tend to return to those levels in the future. As you can see here, this cave right here has the single prints, and at some point the market likes to return to fill this back in. Okay, it could be the next day, it could be the next week. At some point you will see the market likes to return at this area right here at the top of the single print. Sometimes you will get nice bounces off of it, and we will see this on the next slide as well. And once you get acceptance inside these single prints, the odds are good that you are looking for a destination trade towards the other end of the single print. Let's take a look at this realistic example that happened on ES recently. We have a trend day in this profile right here. When you have thin profile on a trend day, either to the upside or to the downside, you will often see an area of single prints. In this case, this D period right here has left an area of single prints, and at the lows you can see here the C period has left one single print right here. Okay, so this is automatically a point of interest for us in order, at some point that the market likes to return towards it. Okay, you can see here the overnight happened, then the next following day, and then you have the jobs report right here, which we will break down next. When you are identifying single prints in real time, you have to wait for the brackets to close. Let's take this example right here. This D period, you see how it moved higher. The bracket cannot be confirmed until the E bracket has closed and the F bracket has opened. So in this case, the E period closes, the F period has opened, and now you have an area automatically of single print right here. So this is confirmation of this area having single prints in real time. And you can see how the F period has returned to fill some of these single prints that were left on the D period and then moved higher, continuation. Okay, so this is a very key thing that you have to note when you are trying to identify these areas in real time as the profile is taking shape. Now let's see how we can implement this knowledge of single prints to our narrative in order to identify key points of interest for the market. This is our newsletter on Substack prior to the US jobs report, where we shared our expectations for the market as well as some key pivots that we were interested in. As you can see here, we have our pivots at this area of the single prints, as the market had a lot of room to go towards this area. Usually when you have economical reports, often you will see the market perform one swing on one direction followed by a swing in the opposite direction. So we've warned about this behavior one day prior to the fact. Using our Sierra suite, let's highlight how we are able to identify these key areas as point of interest and how the market should bounce to the upside right after it touches this area. Okay, so first of all, you can't just say I'm just going to long this area. Okay, you have to have added confidence. In this case, as you can see here, this is a low volume node. Okay, as you can see, this cave that we highlight, the C period, you have a lot of value building above and below it, but it's very low volume. So once you find acceptance inside this box right here, look for the opposite direction in terms of continuation. Okay, so the market right here has left a single print. This was our key area right here, It also is the highs of the European session right here. The market returned towards this area. You have this Fibonacci, this is our CR suite. It automatically will plot the retracement, and you can see here this was stacked confluence in order to make this a nuanced level for the market. So you can see here news come in, the market breaks, bounces initially off of this highs right here, and then finds continuation. We will see this on the candlesticks, how it bounced off of the first pivot, but then it found acceptance, and the continuation was to look towards the other side of the single prints, okay? And it retraced it all back towards this single print. This is what it looked like in the candlestick format. This is the 1 minute. We are trying to showcase how the price unfolded right after the most volatile type of movement that we were possible going to get. We have an initial bounce off of the first pivot that we highlight right here. The market didn't find any continuation, then look for downside breakdown. Okay, if the market doesn't get any type of serious continuation, the market stalled right here, and then we were seeing at a breakdown inside the low volume and single prints. Okay, this is a low volume area. Look for continuation towards the opposite side of the single prints. Okay, single prints right here get filled, then look for upside continuation in this case. Again, you can just say this is single prints. I'm just going to long this. As we showcased on the previous slide, we were looking for continuation because it was a stacked confluence type of area right here. And of course, you can see here the comment that we've made. Look for one swing, then the opposite swing equal to this move. This whole move was met with another continuation to the upside. If you're using the CR suite, you're going to be able to identify all these key areas. As you can see this example again, it was left with a double distribution. In this case, we have the market finishing up here. You have the overnight session bouncing off of the initial single prints. You can see here the single prints, but right after the next session completely feeds them up. Okay, we always say the market at some point doesn't have to be the following day. The market likes to return to fill this back in. Let's see the US session only. All the time you will see the market returning to fill this back in. Again, this was the high of this US session. Single prints at the gap right here. Look where the market finished. Okay, it built value towards this area right here and returned to fill the single prints and the gap towards this high. So this was another key point of interest for you to look at. Always look at the single prints. Sometimes you will see many single prints. In this case, this is identified as a lot of single prints. Look for a possible correction. The more single prints that you have left on a prior session, the higher the odds that they will be revisited at some point. Okay, if you want access to our CR suite, make sure you check out our website. We have liquidity heat map, we have candlestick with momentum indicators, we have the most advanced market profiles that you can possibly build on the CR charts. We have footprints, depth of market, an ebook course that you can take with explanation of market profiles, order flow and market action. We have bonus items, and of course we have modules that we continue to add with videos explaining how to use the CR suite, all the things that you have to know, and of course one-time purchase fee. Okay, thanks for watching.